Alright guys, in this video we're going to be talking about supply and demand and why I think it is the best way to trade any market. For this example, we're going to be going over SPX index, so the S&P 500, but you can use this for any ticker or whatever you like to trade, and it pretty much works for anything and everything. Now, before we get into it, I want you guys to first understand what supply and demand is and how it is created in the markets. And to understand that, we first need to understand what is the basic fundamentals of how the market moves. So essentially the market moves for two reasons. So the market has what's called balanced periods, or you can call it consolidation periods. And then we have the imbalanced periods where the market breaks out of a specific range and makes a big move to the either the upside or the downside. So looking at this chart over here, we can see we have several balanced periods on the chart, meaning consolidation periods, where buyers and sellers are agreeing on a specific range for a stock. So typically it's going to be a tight range. We're looking at an hourly chart here, so it's a bit bigger of a time frame. But as you can see, we have these small ranges here. Buyers and sellers are agreeing on this range over here. Then we have this big breakout to the upside over here where the buyers actually disagree strongly with the sellers and they overwhelm them significantly, causing this huge upside move. So when we get a breakout of a channel or of a balanced period like this one over here, this is what's called imbalance, and that's when we create a now demand zone. So we have a demand zone over here now. So if this had broken to the downside, we would be creating a supply zone because there's going to be unfilled sell orders waiting at this zone rather than unfilled buy orders like we have over here. So when the price moved so aggressively to the upside here, lots of institutional traders have unfilled orders waiting in this range to buy this because it moved so aggressively and basically gapped up the next day. So all those unfilled orders, when the price comes back to retest them like it did over here, you can see you found some support and we found aggressive buying into these zones. So this is what's called retesting a balanced zone. So we had this balance period, we broke out, created imbalance, strong imbalance to the upside. Now when we're coming back to retest this, we can expect that this zone is going to find buyers again because of all those unfilled orders. Now, one thing you guys have to understand is, retail traders do not move the market. So when you have the institutional traders coming in, they're trading with such large size that they actually influence the market and create these imbalances. So when you have an upside move like this, you can be sure that there's unfilled orders with large size waiting to get filled again. And as we can see here, price comes back, retests, and it holds, and it didn't manage to bounce very much, but it held this level. So it acted as expected. So the imbalances and the balances are very important to recognize so that you can find these supply and demand zones. So let's focus on the chart more again, and let's get into some of these lines we've drawn. So basically this is the SPX, very similar. You can trade the SPY, SPX, ES, whatever you want to trade, futures, whatever fits your style. It's all pretty much the same. So what we had here was, let's look at this first upper time frame here, or sorry, this upper channel. So how did we get this this balanced period? So we had a balanced period here when it made a really big down move and it found support. So we found this support and then we kind of consolidated here, aka balanced. And then once we broke out of this range, this is when we create a big supply zone, because we had a big imbalance move this time to the downside. So now we have a big supply zone here to trade for the future if it ever comes and retests this zone. And as we can see here, we came back into this zone. It was struggling here. It had a nice gap up day here, and then they just completely sold it off right into this level right here. So this zone was obviously very heavy supply. Lots of unfilled institutional orders were waiting here to sell once the price retested their orders. So this is where retail traders get trapped often, and they buy the breakouts where, the bigger traders, the institutions, the big hedge funds, they're selling their position while you are buying, right? So this is why this strategy is very important to understand, because it can give you a huge edge in the market, and you're basically going to be trading like an institutional trader. So instead of buying breakouts, you're actually selling when other retail traders are buying into what seems to be a breakout zone, right? So as we can see here, there was such a strong imbalance here due to that supply zone. We actually ended up breaking right through these support levels over here, and it didn't even look twice and just went straight down, didn't look back, and here's where we fell into these levels over here, right? So this was the next area of interest, this next demand zone. So once we tested this demand zone here, it was a good buying opportunity. You could have bought anywhere in these wicks, these bullish confirmation candles, and you got a little bit of a scalp out of it, but nothing too crazy, no big upside moves. And then we had another big downside move here out of this previous demand zone. So this is going to become a new supply zone, right? Because we had demand here, it broke to the downside out of this balanced period. Now we have a new supply zone. So as you can see now, we're back and we're testing this supply zone here. So if we can break out over it, we can create another imbalance, and this can become a demand zone again for the future. But as of right now, you should expect it to fail because it's heading into a supply zone, and we expect these levels to hold unless they prove otherwise. So as we saw here, when it fell down into this zone, we fell into this prior demand zone over here, and look how it reacted, right? The buyers that were not filled here on this big breakout move to the upside, their orders were waiting to get filled, and they were holding the market up here. Along with retail traders, they're also watching these levels as well. But as we mentioned before, retail does not move the market. Who decides where the market goes is really up to the institutions and the big money. So retail, our job is just to trade along with the big money and follow what they're doing. Otherwise, you're going to be losing money, and they're going to be taking your money away if you don't know what you're doing. So that was a nice area as well to go for a long. And let's go to a smaller time frame now to look at how these supply and demand zones look on intraday charts, so on the smaller time frames. So here we have Thursday and Friday. So you had two opportunities here to get some calls, and these were great opportunities, which I actually missed this one on Thursday. I believe it was Thursday. Yeah. So I missed this opportunity here. We had a great pull into this prior demand zone, and we got a really nice, as you see, very nice bounce from that level. Now, as you can see, these zones are not perfect. They're not always going to be picture perfect and to the exact T, but you can generally expect them to hold within those levels. So that's why we don't just draw one line. We draw one or two lines to draw a zone. So we know that within that channel, we have a high likelihood of buyers stepping in, and we can use that as our guide for risk. So the thing with this strategy is, just like any other strategy, it's not going to be 100% all the time, right? And this is why you need confirmation as well as your, you have your where and then your when. So where you're entering, or where you're interested in entering a position, that's your strategy. That's what your strategy tells you. It tells you, hey, these levels are interesting. Buyers or sellers are interested in these levels. This is where you should be looking to enter your position. But we also need the when, which is, when do we actually execute our trades and when do we enter our positions? And that's where the confirmation needs to come in. So for me, confirmation comes from price and volume. Those are the two things I look for. I don't need any other indicators on my chart. I think I respect all indicators that people use, but honestly, I think they're all BS, because price and volume is what tells you what the stock is doing in the moment. All these other indicators are based off prior data, and they're based off the past. So you got your moving averages, your Bollinger Bands, your Fibonacci's. These are all based on levels on the past that the chart is traded. But when you're looking for confirmation, you want to see what's happening right there and then in the moment. And that is when price action and volume tell you everything you need to know. So this is why tape reading and screen time is so important. I always stress to you guys, understand the tape, understand price action. That's going to be one of your biggest edges in trading, because that's what actually gives you confirmation and conviction in your trade ideas. So you can have a good strategy, like say a supply and demand strategy, like we're seeing here, like we're talking about. But if you don't have that skill to understand when it's time to take the trade, then it's kind of pointless, right? It's pointless no matter what kind of strategy you trade. You can have the best strategy in the world, and it won't matter because you don't have that confirmation and that confidence to enter your trades. So that's when the screen time really comes in, and that's where this will come with time and practice. But the price action and the volume is what you really want to focus on as your number one indicators. So now let's talk about a theoretical trade we'd take in the future. Let's say the market's closed on Monday, so we open up back up on Tuesday. We don't know if the SPY or the SPX is going to gap up or down, so that's kind of unknown. We're not really sure how the price is going to open. But let's just say the price opens around where it closed, just for example. So we know that we're in a supply zone right now, as we've discovered here. If we look at the bigger time frame, we have confirmed that we are in a supply zone here. So this kind of 380, 3800s to 3825, or sorry, 3830s. So this is kind of a supply zone we're in right now. So we can expect that price will remain within this channel, or at least struggle within this zone, unless it proves otherwise, right? So this is where your confirmation will come in to tell you whether this is going to be a long or a short. So if it's going to be a long, you want to see buyers extremely overwhelm the sellers on Tuesday. So market opens up Tuesday, say you're watching it. Let's pull up the 5-minute again. Say you're watching the market on Tuesday, opens up really strong over this 30 level, and let's say we get a strong push out of the opening gates, and then we pull back into that level and we see strong buyers confirming that this level is now becoming support or demand. That is our indicator that this is likely going to head higher, and this is breaking out of that prior supply zone. So that's when we can confirm that we're going to get long, and that's our confirmation. The price and the volume is all you really need. Now let's say the opposite happens on Tuesday. So let's say we open up slightly above this 30 level. We make a push into this 35, and you got retail probably thinking they're going to break it out, right? Because it's looking pretty strong at the open, but they don't really wait for confirmation. So they're just seeing the price moving up and they're kind of chasing it. Now let's say we get a really strong slam down, and we actually slam all the way down, back down to this 20 level, 3820s, and then we make a lower high at 25. This would be an indication to me that it's time to get short. It's a good signal to me that they're showing weakness at this supply zone. The supply zone and the sellers are overwhelming the buyers. That is when I'd consider taking a short position when I get that confirmation. So all I need to see that confirmation is price action and volume. So we see the price action, we see that lower high, we see it push at the open, come down, lower high, and then we can expect to move lower and potentially get down to these this prior zone, the low of the demand, the low of the supply zone. So we can expect to get down to here, and then if we break under this, and then we're going to head much lower to the next prior demand zone, right? So try to keep your trading very simple, guys. The more simple you can keep it, the better your results are going to be, I guarantee you. I see so many traders jumping from different indicators to different strategies, thinking they're going to find some holy grail. Well, if there is a holy grail, I will tell you this is it, right? The fundamental basics of price movement, supply and demand, price action, and volume. That's all you really need for indicators. Believe me, I've tried many different strategies, tried all kinds of indicators. Most of them are BS and don't really do your trading much good. So stick to this kind of strategy, and I assure you your results will be much better than they are currently. So the great thing about trading supply and demand is it's very clear cut, and it tells you exactly when you should be interested in a trade, where you should be interested in the trade. And basically we're trading only when we see these supply and demand zones getting tested. So another thing I forgot to mention here is, the more recent a supply zone or a demand zone is, the more effective it will be in terms of, bottoming out or topping out at those either supply or demand zones. So because we can see here, this is relatively recent, this zone over here we just created. We did test it over here, so we had some unfilled sell orders get filled over here. So now that we're breaking out here, we may actually be able to break out because a ton of the orders got filled already in this zone over here. Now, if we hadn't tested this zone yet and we were just testing it for the first time here, I'd be much more confident going short because I know that there weren't many unfilled orders that got filled recently. But because we just had some of those orders get filled, probably a good chunk of them got filled in this kind of action here, and now we're clearly bottoming here. We're showing strong demand down here, and we're ripping right through into this into the highs of this supply zone. I wouldn't be so confident to short it. So I'd really need to see that confirmation, like we discussed on Tuesday, and I told you guys what I'd need to see in order for me to get short. And right now, as I'm seeing it right now, this does not look like it's going to be a short, just based off all this information I'm seeing here. So we had the supply zone, we had it retest, so we had a bunch of those orders get filled, and we're heading right back into it with strong volume and strong momentum. This is a time to be cautious if you're going to be shorting, because you want to really wait for that confirmation, right? You don't want to be guessing it's going to be the top just because it's a supply zone. You never want to guess, right? You always want that confirmation, like we talked about, either price and volume or whatever confirmation you like to use. But price and volume is the king, in my opinion. Just use the price, use the volume, price action and volume to dictate whether your thesis is going to be correct or not, and how the chart is playing out in the moment. So are the buyers in strong control, or are the sellers in strong control? That is what price action and volume will tell you. So I hope you guys found this one helpful. A lot of requests for this supply and demand video, so I really hope you guys learned something here, and hope you try to implement it into your trading, because it's a very powerful strategy, and some of the best traders in the world that I know use this strategy, including hedge funds and institutional traders. So hope you enjoy this one, guys. That's it for today, and we'll see you in the next one. All right, have a good weekend. Cheers.